Hey there, welcome everybody. Chris Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 28th of September, 2021. Here in a beautiful but slightly overcast Bernie, Texas. Great to have you all checking in. And as you can see here, it's coming soon. So be on the lookout for it, guys. We've got a whole new site coming in under TexasWestCapital.com. And what we're going to do is when that happens, we're going to have all the new business come through there. And then if you're currently a member, we're going to move you over there. And we're going to have redirects on the old howtotradetowin.com site and everything. So that way you guys don't have to worry about a whole lot. But if you see it redirect you to TexasWestCapital.com, then you'll know you're in for something special. This new back end that we're bringing in is going to give us a lot more flexibility. It's going to give us the ability to give y'all an affiliate program. Again, kind of rewarding you guys for talking about us. You guys do it anyway, but I think it's about time you guys got paid to do that. And, a whole bunch of other stuff. We're going to actually have coursework now. We're going to have it where you can actually go through a course, have quizzes, earn certificates, stuff like that with everything we do and so much more. So anyway, really exciting. That's coming up soon. But for now, you can still get us over here at howtotradetowin.com. We'd love to have y'all with us, guys. Tier 3 is where it's at. You get everything, that we currently do right now, which includes 3 live streams a week. We do a Wyckoff live stream where we apply the Wyckoff method to current charts. We've got an Elliott Wave day where we, or a live stream where we apply Elliott Wave to current charts. And then we've got our tips, tricks, and techniques, which basically gives you rules-based systems and explains indicators more in-depthly and shows you how to use them properly. Guys, there's so much information on here's this thing and here's how it is, but none of it really explains to you how to do it. How do you use it? How do you, apply it? How can you use it together? Stuff like that. So we're just trying to help you guys get from A to Z, guys, right? From zero to hero, right? And so we'll do that, everything, of course, as we can with that. So we got all that, chart requests, chart critiques, so much more all over there. We'd love to have you. I know it says 80 hours of educational video content here. I think we're well above 120 or 130 hours now. Tons of content, guys. Tons of content. So you should be there, right? Who's here already? Let's see here. Christopher Arkski, what's up, man? Hank's here. Devin's here. Nevlusian. Mark, Spiral Architect, Data. Is that Mahit? I know I'm going to mess up your name. I'm sorry about that. Mahdi? Guys, I probably sounded like an idiot saying that. My apologies. Don't mean to sound disrespectful or anything. I hope I was somewhat close at least anyway. Glad to have you checking in. Andrew here says, good dollar increasing. Yeah, that dollar's kind of popping up there. Again, nothing surprising, guys. Same thing we continue to talk about. And having its effect on the markets, the same thing we said would happen. So we'll take a look at that today as always and kind of see where we're headed with all that. Hey there, Wazobia Dollars. Good to see you. Oh, was that you who did it? Yeah, I was gonna talk about that today. Yeah. Oh wait, that wasn't Zero Hedge, was it? No. You tagged me on. Let me see here. You tagged me on Zeberg, Henrik Zeberg. I probably screwed up his name too. I didn't mean to, of course. But yeah, that's who you tagged me on with that interesting chart there. Remember, guys, I think we're still headed up. I don't think we're done yet, but until we actually get above that all-time high, there's still some possibilities with all this. So we're going to talk about that today here as well. Hey there, Bill. Good to see you. He says, fuel panic buying in the UK. Yeah, man, no kidding, right? That UK fuel stuff is no joke right now. So, yeah, you guys, man, oh, man, crazy times over there, right? Scotty, good morning. Leighton Stone is here. And he's mentioned as well, petrol shortage in London. Please send us some Texas oil. Oh, man. Yeah, and I happen to be right here in the heart of fracking and horizontal drilling area down here. So we've got the basin down here. Pull a lot of oil out of that, guys. Let me see here. Hank says, it feels like Wheel of Fortune where he's at right now, unlike crypto at the moment. Hey, Brian Riley, good to see you. Crypto Surrey is here as well. Tell you, Ryder, checking out. Colio, good to see you. Let me see here. Hank says he's long life, at least until you're not anymore, right? Hopefully it's not for a long time, Hank. Oil and gas topping? I think so. We saw this surge in natural gas. We follow natural gas every day, and it just kind of did this big... I think it may have done this big blow-off kind of top here. We'll see. And oil and gas, we were looking for that top coming in anyway, and it looks like it's pulling back, so we'll take a look at that as well. But I think there's a lot of good possibility in that, which we kind of expect here. So we'll see what's going on with that there. Let me see here. Ace and Risk, what's up, man? The inner rim of hell where it's finally cooling down to respectable 82 degrees. Let's see here. There's Music checking in from Germany. Hello, my friend. Good to see you checking in from Germany. Let me see here. Third wave topping in gas? I've got 5 waves. So like I said, we'll take a look at that. Can you explain how the dollar rallies when they say we might default? I'm sure it's all smoke, but still seems oxymoronic. Hey, Scotty, are you signed up for my my newsletter? I was just talking about that this week. If you guys don't know, I do have a newsletter. We've done 3 weeks now. It's a weekly. It's free. Let me kind of pull this over here for you. And if you're on Twitter, you can just come over to my profile here at TX West Capital right there. And then you can come on right here and boom, click on that. And that gives you our last 3 issues are here. You can sign up and get it sent to your email address there. And so, by the way, I know we had a little issue the first week or 2 trying to get it out to everybody. Review was. But the information I got back today was that all our members that were subscribed, or everybody was subscribed for this third one, the email was delivered to their email, so it should be all right? But yeah, we'll talk about the dollar there with the default and everything. Basically, if we default, everything becomes a lot more expensive. So and if everything's becoming more expensive, it just... Yeah, we'll talk about it. Hey there, Boris. Good to see you. Let's see here. Andrew says, following wedge on daily Bitcoin, maybe last bottom tap before breakout. Well, we'll go check a look at that. But anyway, guys, yeah, if you haven't done this, go here. If you don't have Twitter, click on that link right there. You can sign up for the newsletter here. Like I said, this week we were talking about, let's see here, boom, we'll get this up here. Yeah, so we're talking about U.S. debt ceiling, the non-farm payrolls coming out the end of this week. I discussed a little bit about what Jerome Powell said during last week's FOMC release, and what he was kind of talking about in terms of things that he's looking for with the jobs and other things. Twitter's has done this tips thing now. I guess only if you're on iOS. You can't do it on desktop, and you can't do it on Android. But apparently Android's in the works and should be here soon. But supposedly, if you're on an iPhone, let me check mine here real quick. You can click on the Twitter app there. Let me see here. And then once you click on the Twitter app, let's see. Click on profile for your profile, and then edit profile. It's not showing up on mine, but I guess they're currently rolling it out. Some people have seen it. But when you do that edit profile there on iOS, it should come up with a little switch in there that you can click on for accepting tips. Now, the one thing though I want you guys to be careful about is if you do that, if you send or receive tips, depending on which because it's basically, it's not that Twitter is taking part in the whole thing. They just have made connections to various wallets and whatnot. So your information, your personal information, your name, your address, stuff like that may become publicly available depending on which you're using. So be sure you guys check that out. You know what you're getting into before you do, tip or set it on to accept tips in there with Bitcoin, okay? But the other thing they're doing is they're looking at verifying NFTs. Since so many of y'all have bought these NFTs and you're using them as your profile pictures, they're looking at implementing ways of verification with that. Again, I'm not really big into the whole NFT thing. We'll see what happens with all that. But for those of you that are, that might be something of interest to you. And, of course, Robinhood is rolling out some tests for some of their members testing crypto wallets. So, the big complaint about Robinhood before is people got into it and they thought they owned the coins and all this, and really they were just kind of getting exposure to price action, not really getting the coins themselves. They couldn't take it and send it off anywhere or anything. It stayed on there on the Robinhood app. Robinhood, the cryptocurrency's become a huge part of their business now. And people complaining, so I guess they're looking at making it available so that you can transfer your crypto on and off the platform there. So, trying to do what they can do to to remain relevant here, right? You have to be verified for Twitter tips? No, it didn't say that. It didn't say you had to be verified, which would really kind of suck, right? Because that whole blue checkmark thing's a joke, but I didn't see anything where it said you had to be. You can check on with the Twitter fact there or whatever and see. I don't remember seeing it saying you had to be verified for it, though. Who needs to be a dictator of a small country? God, who wants that job? Who wants to be in charge like that? I don't. Heck no, man. I'll leave that headache to somebody else, right? But as always, in every episode, in every issue here, we have, the macro idea, what's going on. And I take a concept from that week to talk about. Like I said, this week was the debt ceiling and the non-farm payrolls number coming up. And, of course, discussing a little bit about Jerome Powell's comments during last week's FOMC release. We give you a financial term of the week and give you some, a definition and some links to understand it better. We talk about the dollar, usually Bitcoin or some other crypto in there. Maybe oil or gold or some kind of precious metal, something like that. We usually take a look most of the time at the one of the indexes. Give you a couple of trade ideas, give you my live stream schedule, some resources, my bio and disclaimer, stuff like that. So there it is, guys. As I said, I'm going to keep working on making it better and better. By the way, I've started adding in the previous week's Friday's live stream that we do in there as well. So in case people haven't seen it or whatever, they'll get to see it there and see what we're talking about. So, yeah, there we go, guys. Should be a good time, right? Don't let anybody tell you otherwise, guys, man. Writing them newsletters, that's a lot of work. It is a lot of dang work. But hopefully I can help you guys get a better understanding of what's going on, in the world in terms of these larger macroeconomic concepts. Hopefully a better understanding of the whole global financial system, guys. It's so interconnected, and again, all we ever hear are these sound bites, especially on social media. Dollar, printer go burr, dollar, which means dollar is hyperinflating, and and all these silly things that really, when you understand things, don't make a whole lot of sense. But if you don't understand it, it can seem like it does. And so my goal is to help you guys understand it better, so that way you're not taken in by what's going on there. Because the more you understand about what's going on, the better your trading can be and in your investing. As long as you continue to go by the nonsense, it puts you at risk a lot more. So, yeah. Let me see here. World leaders would kill for my popularity ratings. I don't have any popularity. People hate me because I tell the truth. The people don't like that I say something different that what they hope for. Their hopium many times. And, it's unfortunate. But, the way I figure it, guys, you're here. So you're serious about wanting to be serious about trading. And so, I don't worry about it a whole lot, right? Thankfully, my income doesn't come from my popularity. Oh, man, I'd be poor. I wouldn't be able to survive. But that means that I get to tell you guys the truth, right? And that's what y'all are here for, hopefully, anyway. And there, Demos, good to see you. My day is going well. So here's Bitcoin, guys. I bring up this chart just to kind of remind you of what we're looking at here. Bitcoin continues to look a little weak locally. But in the grand scheme of things, all it is a pullback to the previous range resistance area, guys. I mean, that's all it is at this point, right? Of course we have, you can see here that we bounced here off the daily S1 pivot, which was the top of this demand structure here. Took us up to the pivot. We're pulling back now, to this previous swing low area. We've kind of hit it a few times with some wicks there. And we'll see if we can get this one at a higher low here and break on out. I mean, ultimately what you're looking for, guys, if you want the safest trade on a long, as I continue to say, it's the breakout of this descending channel resistance, or, again, you can kind of throw this in here and you've got a descending wedge here. Right here with the top and the bottom there. But you're looking for a breakout of that. And when you get a breakout of that, you're looking for a target of about $11,000, $11,026 above that point of breakout. So that is most likely to carry you up here into this higher volume node up here. Right around 55,500, 55,600 kind of area. Which really is just kind of the EQ here of the previous distribution. Right there. You see that right there? So if we were to come out, let's say this is the 2nd of October, so that'd be Saturday. If we were to pop on out about that day, your target's right there at the EQ of that distribution area up here. So significant area where you would expect to get some initial pullback anyway, right? Patrice, what's going on? The weekend's long without me? My weekend was long anyway. For those of you that didn't follow me there on Twitter, I took the family out to Port Aransas this weekend, Port A. We had some fun out there, get some beautiful beaches and really good sand and great. If you guys ever go there, if you guys ever go down to Port A or Corpus Christi, it's right down the road from Corpus Christi and Padre Island and all that. If you ever go there, there's a great joint called Mac Daddy's, a little local family joint there, and just got amazing barbecue, guys. Really, and try their mustard, man. They got this handmade mustard. Oh, it's great stuff. But anyway, went out there and went around to Corpus Christi and North Shore over there and all that kind of area. Now that my sister and my mom are over here, they'd actually never been down there. So that's why we went. Had a good day of it. Is a large drop coming in October? That's the $1 million question. We're going to look at that. Remember, the whole idea of the potential October drop, remember, it was 1987, which we had Black Monday in October of 1987. I think it was around October 19th, maybe, something like that, where we had that huge drop in the indexes and the stock market. And then it was also in 1929, the real big drop that kind of really set off the Great Depression happened in October. In both those years, the market itself topped out in August. And then it just kind of rallied back up, for that wave 2 into October. And then, bam, that wave 3 kicked in October. And so, that's what we're kind of looking as a possibility here. The indexes are looking really just awful right now. So we'll kind of take a look at them as well there. Let me see here. 83 Madden. Could it also be that a Wyckoff distribution phase could start with Bitcoin if it falls below the 40,000 mark? Let me see here. 40,000. I guess you're talking about this whole thing being distribution here. See, the way I see it is we've got distribution here. We've got reaccumulation here. So this whole thing here looks similar to something that we, as a larger reaccumulation range, kind of like this reaccumulation after decline here. Like I said right here, overall the volume just continues to drop off. We got volume here at the low. We got volume here at the low. Let me see here. We're getting that volume kind of at the lows. In this area here, we had, big volume, lesser volume again, which is what you want to see at the bottom of a reaccumulation range. You want to see that as it hits your volume there, you really want to kind of get less and less. In this area over here, we've got this drop down, which really, again, you've just kind of got your demand showing up here and here. But notice in this area, we've got volume picking up. So we've got this decline down, where overall volumes come down other than this spike. And then we've got volume kind of kicking up and sticking up right around this area. Now, even more locally here, you can look right here that we've got this decline in volume as we've got this pullback here, this overlap. And generally that's a sign of correction rather than impulsiveness. So we still need to see price kind of move its way on up. So we'll see what goes on there. I think as I've said, if we're dropping down below 37, this swing low right here, right around the 5th of August, 37,355. If we're dropping down below that, then, I start thinking a little bit more about a potential AB here and heading down. But until then, I'm not really concerned about it. I'm thinking upside. But really, until we're breaking down below this swing low over here at 29,288 and 60 cents, until we get below that, I mean, this could just be a wave 2 just pulling back, a deep pullback here. Okay? So, I mean, you really start thinking about further downside when you get below that swing low over here. Because if you get below that, you're going down lower. Until that, you've still got a good possibility of just a wave 2 here on the pullback and heading up there. Let me see here. Is Bitcoin correlated to stocks? No, they're correlated to, inversely correlated with the dollar, generally. So if the dollar is gaining more and more strength, then generally you're going to see Bitcoin and stocks, the stock market kind of gaining in weakness there. But, again, it's a larger time frame look at it. It's not like, oh, the dollar went up right here, so everything has to go down all of a sudden. Though if it moves up or moves down significantly in a short period of time, you're going to see that reflected opposite, in these charts. But in general, you're looking at those large weekly charts and whatever. And so, and sometimes during those weekly charts, you'll see that, let's say, everything's kind of going up. So the dollar's going up, Bitcoin, everything seems to be going up. But realistically, in the dollar, it's just kind of sideways. It's just in this range. And so then you go, but look, it's going up and Bitcoin's going up and stocks are going up. So what the heck, man? They're not going opposite. But, again, it's a whole understanding of what's going on there. We're looking at general trends with that. What is happening? Checking in from Charlotte, North Carolina. Good to see you. Hey there, CS. Let me see here. Is that say crashed? It says USA market's going to crash. Better to buy Bitcoin and Ethereum. I'll tell you what, if the US market crashes, you better not be in Bitcoin and Ethereum. If the stock market's going to crash, guys, you got to understand what's going on here. A lot of y'all are just buying into all this opium with cryptos. But, at the end of the day, if the stock market's crashing, what that means is there is a risk-off environment. And if there's a risk-off environment, that means people run to dollars. They run out of risky assets, which are stocks, which are cryptos. Okay? You guys absolutely have to understand this. If you just refuse to believe it because you don't want to believe it because somebody's told you that it's going to replace the US dollar and all this other nonsense, I don't know what to tell you guys. Again, I've got good hopes for Bitcoin about the future of it, but I'm not silly enough to believe that it's going to, to overtake the US dollar or anything like that. As a matter of fact, if it ever got to that point where it was looking like it might, I have no doubt that the government would shut it down. And you say, oh, but they can't shut it down. No, but they can shut you down from using it, just the same way they can shut you down from investing in hedge funds. And if you think people are still going to be out there buying crypto because, oh, it's not right that they don't let us buy it, with the threat of federal imprisonment, you're crazy. You're going to be a couple of idiots out there who are going to do it. But if you're living in the U.S. and the government says you can't have crypto, the government says, we're going to throw you into a federal prison for 5 or 10 years or something if you're found with crypto, most people aren't going to. Why would you be dumb enough to do that? Oh, but everybody talks big until it comes time to do it. Nobody wants to go to prison, especially not federal prison. Being there with rapists and murderers and crazy people of all kinds. Oh my gosh. I can't even imagine. There's so much disconnect between, people's opinions without actually going through something and then having been stuck in front of it. But as a reality, most people, I don't think if the government were to outlaw and say, hey, you're going to federal prison if you're caught with it, I don't think most people are going to be playing in it. And that's a big bust for Bitcoin in general, the worldwide. U.S. is one of the largest Bitcoin and cryptocurrency markets in the world. If you don't think that's going to significantly curtail Bitcoin's rise, you are mistaken. But, that's how it does. Power seeks to remain in power, guys. And I've seen a lot of comments kind of flipping up here. I'm kind of scared to look at them because I know there's going to be some arguing going on there. But this isn't up for debate, guys. This is the way it is. This is the reality. Historically, it's proven. The only way that it doesn't happen like that, if the government was to outlaw, is if the government gets, it goes away. As long as the government's in control, it's in control, guys. Okay? And, again, it's not that Bitcoin or anything else is really easy to hide. It's very easy to get caught is what it is. Why do you think the government likes the idea of cryptocurrencies and stuff like that? Why do you think they haven't stomped it? I mean, they get everybody interested. Everybody gets excited and interested in it, and so they're willing to accept, a central bank's stablecoin, and all of a sudden they can track you with everything, guys. They can track everywhere your money goes, especially if they're sending it to you. Think about this, guys. If the government is sending you a cryptocurrency, right? They know who they're sending to. They just go and they just have to follow where it goes. They know exactly what you're purchasing where, or they know where you're purchasing it from. And so all of a sudden you're constantly under surveillance. That's where we're headed. I mean, it's not going to happen. It's definitely going to happen. I feel like it is anyway. And that should be, that should freak you out a bit. That's not cool, man. But that's where we're going to be. It's not going to be Bitcoin, though, because the government doesn't control Bitcoin. Government's in that point of power. It's not going to do something that it can't control, right? Let me see here. Yeah, exactly. Bitcoin is a risk-on asset. Exactly. It is. And, again, guys, when I say things like this, those of you out there who don't tend to listen, you go, oh, you're so bearish on Bitcoin. Oh, you hate Bitcoin. Oh, you just don't understand. No, trust me. I understand probably a lot better than most people. You don't understand is the problem. And it doesn't make me bearish on or whatever. I've got, again, if I was, I would have sold already. I would have sold all my my investment in it. There's no reason. But right now, I don't see there's a reason to yet. I'm still looking at it potentially making a new higher high here and running up to at least 100 grand. At least. But it still has to do it. Until it breaks out above that all-time high, anything can happen. This could still be an A, B, or worse yet, a 1-2. So don't confuse yourself with what I say and what you knee-jerk reaction think I mean. Listen to what I'm saying. All right? Hey there, Sean. Good to see you. I definitely haven't been saying crypto's risk on. Sure I have. That's exactly what I've been saying. It is a risk on asset. That's why if the market goes risk off and the market's drop and everything, that we expect Bitcoin to drop. Sure. I don't know how you missed that, Hank. Or unless you're talking about somebody else. Maybe I missed somebody else. If we break the wedge and move to the local high at the 53 range, so up around here, and bounce off resistance, could we see a possible ascending wedge pattern, maybe rolling through October, November? Well, I've got this, right here. We can look at this here as an A, so 1, and then A, B, C as a flat for 2, and then 3, and then 4, and then 1, 2, 3, 4, 5 potentially. So we can get 5 up there if we're looking at that. I've just got to make sure that this wave 3 here wouldn't be the shortest. Let's see here. Yeah, see, it just barely stops right before it breaks out. So, I mean, I've got 1, 2, 3, 4, and then 5 here. So I've got 5 up. So on this pullback here, we're only hitting, so far on the pullback. You see here. Put way down there. I mean, we're only, 38 to 50%, right there above the 50%. So, I mean, that's a solid wave 2. It's 3 waves down. It's the daily S1 pivot right there at the top of that daily demand structure. It's also a pullback to the previous range's resistance, testing as support here. So, I mean, there's a lot of confluence, and, it's creating this wedge as well. So, the drops are getting more compacted, which usually signals, again, you've got a lot of demand showing up more and less supply. So it makes that wedge, which usually, forms a reversal. And so, I mean, there's a lot of confluence in the idea that the bottom's right around this area. Now, of course, until it breaks out, anything can happen. But, yeah, I mean, it's possible. I guess if you wanted an earlier breakout than the channel breakout there, I guess you could potentially look at something like this. Kind of finish off that whole real wedge thing here. But yeah, again, looking at that breakout there to take us up to here, and this would maybe, complete, getting up here, this subwave 1 of the next series of waves up. So, I mean, I don't see any reason to be freaking out right here. Everybody seems to be freaking out. I don't get it. Well, yeah, I get it, but yeah. Let me see here. Yeah, Robert Kiyosaki. I've been following him a little bit on Twitter lately. Man, he's been really flip-floppy over the last, during this year, I guess, about Bitcoin and gold and everything. I don't think he really understands what's going on, to be honest with you. As far as markets go and, macroeconomic stuff like that. I mean, I like what he said. I've read some of his stuff, and, being an entrepreneur myself and doing this stuff. A lot of what he says about all that is definitely true. But I don't think he really understands the markets. And so, like I say, he's been kind of flip-floppy on everything as far as what, you should do or not. And he's very emphatic when he says it on there as well. Very emotional when he says it. So, yeah, it's interesting. It's interesting. Let me see here. If the market dramatically drops, it could be a buying opportunity, but a slow, gradual drop will be very scary. Yeah, it's those slow, gradual drops that you need to be worried, because those are the ones where people continue to hold on and on and on and on, always thinking, oh, well, it's going to turn here, it's going to turn here, it's going to turn here, and it never does, right? And people end up, SOL on that, right? Yeah. Let me see here. Patrick's time. Yeah, it is crazy times, man, right? Let me kind of catch up with you guys here, man. It's got so much here. Let me see. What if government created Bitcoin? I've talked about that possibility. That, Bitcoin is a product of some, alphabet agency, NSA or something, CIA, both of them together. To get y'all, accepting of this whole online thing and accepting of the idea of ledger technology and all that, and then to get you in there. Like I said, the end game for something like that is that they would be able to track you very easily. Like I said, guys, right now, if you understand how the banking system works right now, here in the U.S., if you deposit or withdraw more than $10,000, the bank is required to notify the government. If it's around $5,000, $4,000 or $5,000, they're strongly encouraged to notify the government. But that's really all they can do. If you go down the street with your, you take it out, okay, and then you go and you give your $5,000 or $10,000 to Joe for whatever you're getting from Joe. I mean, they can try and track it through. All of a sudden, Joe's got $5,000, and they're following you around and they see you with him and go, okay, well, there's that connection. But man, if you've got a central bank stable coin, I mean, it's easy. Like I said, all they got to do is look it up. It's right there. It shows where that money's going. It can follow the money easily. It is the absolute easiest way to track you guys, track all of us. And what that means is the government always knows what you're buying. And you say, oh, that's not a big deal if you're not doing anything wrong. Guys, that is the biggest bunch of nonsense, throughout history. Because the thing is, if you give them the ability to do it, they will use that for whatever they want to use it for at whatever point. Okay? And so, if government decides at some point that they're going to use this, maybe somebody eventually gets into office that says, you know what? We don't like these pro-abortion people, these pro-choice people. They've got something screwy going on in their head. Here's this study that says that they're more likely to be terrorists or something like that, right? I mean, this is the way this is the way it works, guys. It's connecting dots. It's connecting fringe things and kind of bringing them together and making it sound like it's okay, making it sound like it's this thing, right? And so then they go, oh, well, now we need to be able to track them and what's going on. And now they start tracking you, and guess what? All of a sudden, they see or they assume that you're this person that's going to do this, and next thing you know, anything you do is caught up against you, right? This nonsense that if you're not doing anything wrong, you have nothing to worry about is just that. It's nonsense, guys. Because somebody at some point is going to use that to potentially hurt you, to potentially say that you're something that you're not. To do something to you before you have a chance to do anything because they assume you're going to do something. I mean, you guys have to understand this. Any lawyer will tell you, do not talk to the cops. And I don't mean that the cops are bad or whatever in general. I just mean that they know that when a detective comes in or a cop comes in and they're questioning you, they're trying to create this connection, right? And a lot of the times, it's not a correct connection. But you're out there just giving because you're trying to be helpful because you know you haven't done it. You know you haven't done anything wrong. You're trying to be helpful. Next thing you know, you find yourself fighting for your life in court. This happens all the time, guys. But this is the way that things work. Cryptos make it easy to track you. And if they can track you, then they can develop any reason for finding you to be some sort of bad person. Which most of y'all aren't. I say most of y'all because I don't know y'all. But seriously, you guys, you got to think beyond these simple little things. And this isn't being conspiratorial. This is the reality of the system, of the nature of the system that we're in here, guys. Believe it or not, this is stuff we discussed in law school. But any lawyer worth their salt will tell you you do not speak to the police. Even if you have nothing to worry about, even if you're not guilty of anything, you don't speak to them. Because you could say something that they could make some sort of connection. Next thing you know, you're having to go get a lawyer, having a lawyer up in court. Just because you said something in a way that seemed like you might be guilty of something. It's ridiculous. It really is. You guys got to protect yourselves out there. But anyway, I went off on a on a tangent there. What do I think about a double zigzag here? So ABC, give you a W, and then maybe an X is a triangle, and then ABC down. Yeah, possible. Like I said, guys, right now we're only right here above the 50%. So, we could continue on down here. Mid-range is only going to get you a 65% retracement. That's still a very solid wave too. But everybody and their grandmother's going to be freaking out if it happens, right? But a lot of it depends on how we count this up here. Again, I'm looking at the idea that we got a 3 and then a 4 and then, a 3 and then an ABC down for A and then ABC up for B and then 1, 2, 3, 4, 5 down here for 4. So it gives us that flat correction for 4. But there, again, looking at some other ways, you could potentially see this as an ending diagonal here. So 3, 4, 1, 2, 3, 4, 5 gives you 5, right? And then you only have 1, 2, 3, 4, 5 down. Now, that means that this has to be an ABC here for B. And that I get kind of a little iffy on that. Maybe you go... you would have to look at maybe something like A, and then A, B, C is B here is a flat correction for B. And then you've got C here. And so 1, 2. See, I don't know how do you get that now? If this is a 1, 2, this can't be an ending diagonal here for 3. So, how do you make that into, how do you make this into an ABC here? So, and I have a lot of trouble with that. It doesn't seem like it seems like it's a couple of waves short to be able to do that. So it seems much more likely that this is 3 5 waves up here, which means this is going to have to be 3 waves down. Whether it's here ABC down, or it's as Crypto Critical was saying there, that you've got 3 waves down as a W, and then you have an X here, maybe a triangle, and then you have 3 more down for a Y, so it'd be ABC, or I'm a WXY. So yeah, that's why I said, guys, look for a breakout above this red line, and then really look for a breakdown above the channel resistance there. That's really what you're looking for. Anything else, you're kind of taking a chance that it might not be. Merv says reality hurts people. It does. People have we tend to live in our thoughts and our imaginations and our what ifs, and for good, bad, or otherwise. And it's if you understand that and you work hard not to, you have a much better quality of life. Though most people can't, though most people don't. They don't even realize that they're doing it, and so they end up in these situations that are just not beneficial for them at all. That are really quite harmful for them. Let's kind of zoom in here a bit. Oh, wait, nope. You know what? Let's look at the other chart where I've got the count on it. So looking at this here, what I've got here as far as the count goes. So again, we looked at the breakdown here through the Chuvashaw fork, signaling that that wave 1 was probably done. Potentially wave 2 right here. And then we've got potentially, if this is wave 2, then we've got, a 1, 2, 3, 4, 5 as a leading diagonal. And so this becomes an ABC here working its way back. But right now we're down to 85%, 85.4% of that retracement. So we're getting pretty close to this wave, this wave 2 over here. Is it possible maybe that this is all still part of wave 2? Well, let me see here. If we look at wave 1 here. So this gives us a 78.6 right around that wave 2 there. So I don't know, maybe we get a 1, and then we get an ABC for A, ABC for B. No, see, it's not a... See, this is where it gets kind of difficult here, because if there's going to be a flat correction, it's got to be 90%, and it's not. This does not retrace 90%. It's only 85.4. So maybe we assume wave 1 ends up here. We've got 5 down here. Okay, that can give us A. And then we get our A, our B, and then maybe we've got a 1, 2 in this area, and then we got a 3, 4, and a 5. So then we have B. And then we're just looking for this breakdown here, which maybe gets down further. I'm not so sure about that. But, maybe. But that's why I said, we're looking for some breakouts here of resistances of some sort. Locally here, maybe this resistance right here. If you don't want to wait for the breakout of the channel there, look for an impulsive breakout above this 1 hour pivot here. You want larger candle spreads, larger expanding volume as you break out above that pivot there. And that'd be your first clue that bottom's in. And then you need to see a breakout, an impulsive breakout above this descending channel resistance. That gives you this $9,916 target above the point of breakout. Right now, if wave 2 ends in this area it's at, this gives us a wave, this wave parentheses 2 here. If this count is correct and it ends about where it's at, that gives us a wave 3 up here at the R1 1 hour pivot. And then that just, that gives us a wave 4 that retests the resistance, the descending channel resistance as support. And then wave 5 breaks out up. So, I mean, as long as we can get a reversal from this area, it works out well. So right now we're looking at the 1 hour chart, and as you can see, the RSI is almost into oversold. Stochk RSI is oversold. If we jump into 15-minute, a little bit more room on that. But remember, this could be a wave 2 up until the point it gets to this swing low here. Wave 2 can retrace 100% of wave 1, just not 100 point anything. It just can't go below that wave 1 starting point there. This wave 1 right here, or I guess this wave 1 starting point over here. So, that's right here. Right there. At the 40,683.29 cents. So, this could continue to drop down here. It just has to reverse by the time it hits that. Deep. It's deep. Yeah, it would be deep. But, let me see here. Yeah, I mean, yeah, it would be deep. Right now, we've got that descending channel EQ right there to potentially provide support. So we'll see if we can get that on that. Let me see here. Let me kind of catch up, guys, with Wiz, man. You guys are really chatty this morning, huh? Let me see here. Oh, Terry Ryder says, I'm not a bad person, but I'm sure I commit several crimes a day. Oh, yeah. I think that they did this study that the average U.S. Citizen breaks something like 5 or 10 laws a day or something. Yeah, it's ridiculous. The amount of laws that we have is just absolutely ridiculous. Do I see the digital euro becoming a thing or no? Yeah, just like we see the Chinese, doing their own digital currency there. The U.S. is working on its own. Jerome Powell discussed that a little bit during the FOMC release, his statement afterward. I think this is something I said, guys. Let me think here. It should have been during the bear market there in 2018, the crypto bear market. That was what I said would happen in the next few years. Remember, I said during the next bull run we were likely to see that the major countries' central banks were probably going to start releasing digital currencies, stable coins for the central bank. Yeah. So, yeah, I definitely see it happening. But remember, if the governments make it illegal to have Bitcoin or other cryptos, that doesn't mean they're not going to do their thing, right? Your country can say, you know what, it's illegal to hold Peruvian dollars. And, it would be illegal to do it. But it doesn't mean they're not going to, if the U.S. said that, doesn't mean that the U.S. is going to stop printing U.S. dollars, right? Same idea. So just because they do a crypto, a stable coin doesn't mean that that they won't do it anymore because they, outlaw or ban Bitcoin or anything else. Like I said, I don't see anything at the moment saying that's going to happen, but things change. We'll have to see how things continue to play out. I think if you take this stance either way right now, I think it's just silly. I think what hurts a lot of people, most people, as a matter of fact, in the markets, is taking these absolute stances, because then they feel like they have to continue holding that stance even if the information changes. And, if you want to be a successful trader or investor, guys, you have to absolutely be liquid. You have to be fluid. You have to move. You have to be absolutely willing and able to change your mind on things as new information comes in, right? So, I mean, it just, you really kind of, I think one of the biggest problems that people who get into the markets make is that they aren't fluid, that they don't allow themselves to be wrong, right? So, yeah, hopefully that makes sense, guys. It's hard a lot of times when you're very emotionally connected to something to see outside of that. But if you want to be a successful trader or investor, guys, you absolutely have to be able to see that other side. And you have to be able to understand why it may or may not be significant. Again, guys, remember, cryptos are still relatively new, guys. They've only been around, 11, 12 years going on that? They've only been around in a secular bull market. They haven't been tested in any real ways. They're still just new. So the last thing you want to do is to come in thinking, oh, they just can't possibly do A, B, or C. Because usually that's when they do A, B, or C. Yeah. You don't want to be caught with it. A lot of y'all have made some good money trading cryptos. The last thing you want to do is lose it because you were so thick-headed and just ignored every other possibility that was out there, refused to even research and understand why. Don't do that. I don't know that there's a much worse feeling in the way of the markets than to make some good money in the market, and then just because of your inability to be flexible, your inability to accept that maybe something different might happen, that causes you to lose it all, and maybe even more, right? Let me see here. Kyle says, I doubt that they ban crypto. We see voices already that want these crypto networks to flourish. They just don't want the USD to lose its supreme status and citizens to be protected from scams. Yeah, I mean, like I said, I don't see any reason that they would do it at the moment here. But again, I told you that if it was to happen, the time that they would do it would be during a recession or especially a depression. Because that's the point when government really steps up and says, here's my power. Because they're going to be out there trying to convince you that they can save you. And they're going to try and protect you from losing your money on these gambling, right? So, if they were to ban it, it would be during, a recession and or depression, I believe. If they were to do it. They're not going to do it at the height of the bull market or anything like that. Because there's no pressure on them to do so. Everybody's feeling good. Everybody's doing good. Everybody's got money, right? That's good. Depression comes in. People are losing jobs. Companies going out of business. People losing their homes, all that stuff. Then they go, oh, well, we need to protect you. So, too bad. So sad, Charlie. Can't do it. Yeah. It's just the way that the governments tend to work, and you don't have to agree with them or whatever, but it is the way they tend to work historically. Like I said, though, right now, I don't see a reason for them to do it. We can speculate on why they would do it, but I think if you're in the market and you're trading based on some long-term speculation, as speculation being a reversal from what you're doing at the moment. So, prices going up, and then you're trading based on this long-term speculation that it's going to crash and, Bitcoin's going to crash and government's going to outlaw whatever. I think you do yourself a real disservice like that. And a lot of people couldn't get that when I was talking about the stock market, over the last few years, about the warning signs that were coming up and how it was looking like it might be doing this, preparing for this large reversal, this macro 233-year cycle kind of reversal. And so then they think, oh, well, you must be shorting it right now. Look at how wrong you are. No. You keep trading the trend until the trend's no longer there. But you're keenly aware, you're paying attention to the fact that things are getting wonky, that things are acting differently than what they normally do. That's the goal there, guys. And you start looking at, okay, well, if we're looking at this here, could this be a top here? If it is, what do we need to see on follow through to start adding confidence to that idea? Too many new traders, they get out here and they think, oh, you've got to have this. You got to definitely know where price is reversing and where price is doing. You got to buy the absolute lowest price and sell the absolute highest price. And all this thinking is completely erroneous. It's all wrong, guys. And that thinking like that is what's going to keep you from being successful as a trader. It absolutely will. Oh, no, I'm making some money right now. Sure, everybody's an expert when the market's booming, right? When there's a bull market, right? Heck, look at what happened. There's a hamster out there, that's has this good return, right? Guys, if you believe that nonsense, yes, there's a hamster. Yes, it's running through tunnels and going on the wheel. And yes, it seems to be that the market is random because that hamster, not being aware of what it's doing, has this return, this great return, right? But no. You brought the hamster in around the lows. Generally, as long as you don't screw it up too bad, you're gonna make money. The market's going up. The market's going up, guys. It's hard to lose significant amounts of money when the market's moving up. You're long, and just like it's hard to lose significant amounts of money if the market's going down and you're shorting, right? If it's in a trend. But see, people don't understand that. And then we have to look at, okay, so the guy putting this all together, did he purposely or even subconsciously put the buy tunnel with the one where the hamster usually uses? We can do that, subconsciously as human beings. We don't even notice that we're doing that. And all of a sudden, you're fixing the odds. The hamster's going to have, if it has choices, it's going to go through the one that is the easiest for it, right? So the one that maybe gets it closest to its bed or food or something, right? And so, you think it's random. You may even believe it's random yourself, but subconsciously you're just sticking that, the buy sign on the tube that he takes anyway, just because you've noticed that a lot. And so you're sticking on the buy side, which means more times than not, he's going to go through the buy tunnel, and the market itself is rising. So, hey, guess what? He's buying in a rising market. It's not random, though. But, this is an attempt to prove that markets are random, which they are not. So, interesting stuff, right, guys? You've seen that article, right? Miguel, what's going on, buddy? He says, people think buying some crypto will make you the wealthy elite in one day. It's not going to happen, so take your profits. Exactly. But, that's why a lot of people come in toward the tops of markets. They hear about all these people. When you get toward the top of a market, price is moving faster. It's making larger gains, right? And then you hear these stories about somebody who made, $10,000 or whatever, and you start going, oh my gosh, I can do that. I need to do that. I need to get rich. You jump into something you have no clue about based on those few things, and you miss all the ones where people are losing money. And then you just go on and lose your money, and you go, oh, everything's rigged against me. It's Wall Street. It's the whales. Everybody's stealing my money. Blah, blah, blah. It's a bunch of nonsense, guys. You have to recognize that, right? Right? I hope you said yes to that. But, make profits along the way. Be realistic. And just go with the flow, man. Don't try to make these huge moves. If you get into a position correctly, there's a chance for a huge move. But most of the time, you're not going to get into your position correctly, especially if you're brand new. So be sure and lock in your profits along the way and look for another entry. Utilize strict risk management, proper risk management, guys. If you can't do that, if you can't be bothered to use proper risk management, then you shouldn't be in the market. I'm telling you right now. You're going to lose your money. I don't know of anybody, and I know a lot of people that do this, I don't know of anybody that is a consistently profitable trader, so what I would call a professional, that does not have their risk management down. I know lots of people who think they're good traders and they don't care to do risk management and they continue to lose money. Right? Let me see here. Merv is saying the sailor was saying that the mortgage the house and buy Bitcoin. Yeah, guys, why would you do that? Why would you take on such excessive risk? Well, we do it because we think, oh my gosh, if it works out, I can be really rich. What if it doesn't? Again, as human beings, we tend to downplay the negative and upplay the possibilities, right? We try to downplay all those negative possibilities and upplay all the positive possibilities. Don't do something like that. Don't put anything more into the market than you can absolutely lose without it affecting your way of life. People coming in every day with every dollar they have and putting it in there without any clue what they're doing. And hoping to God that you become rich. I can't think of a worse way to make yourself miserable other than getting married. I'm kidding. But yeah, don't do that, guys. Don't. Sailor said something else the other day, and I posted there on Twitter. He said, he was talking to Raw Paul there. And he said, what is it? The quote exactly was something along the lines of, the law is black and white. It's very clear. It's black and white. You have every law student ever cringing reading that. We all know that the law is not black and white. If it were, you would have no reason to have lawyers, right? Especially here in the U.S. We have this adversarial system set up for a reason. Oh man, if you guys made yourself miserable and went to law school, you know. But oh my gosh, right? So, he gets out there, and a lot of people who don't know a lot about law or a lot about economics or a lot about money or a lot about the global financial system or a lot about macroeconomics, all that stuff. He gets out there. He's this big, rah, Bitcoin, right? But remember what I told you guys. When you've got these big guys in there, they have to be like that because they've got a lot riding on it. And so, he's out there doing that. And you're coming in going, oh man, look at him. He's so smart. Look at how successful he is in business. And he's so smart. He's saying the things I want to hear as far as Bitcoin goes. That's why I got in here. So we can become rich. And you start buying that nonsense as if it was real. It's not black and white. That's why there's lawsuits. That's why there's pending lawsuits. That's why there's all this stuff going on right now. Because there is no real clarification yet. It's not black and white. And depending on how your side presents the evidence to the court, it may come out in your favor. Or depending on how the other side presents their evidence, it may not. Does somebody find a novel and unique way of presenting, the evidence? It's funny, we say the law is this, but you can go in there and you can just change one little thing about your situation, one little detail about the situation, and that law may not apply the way you think it does. But if you change that one little unique thing about it, all of a sudden your case is completely different. And the outcome is maybe what you think. It's crazy how law works, guys. It really is. It's your specific set of circumstances. If there's a previous ruling that says A, and you're in that situation, and that looks like that may be your thing, you have to find something that separates you enough from that to give another unique look at it. Where they might say, okay, well, in that situation it was that, but this thing is different in your situation, so it's B now. It is not black and white, guys. My hamster with 20 times that random rodent. Its risk advantage would be stellar. I love it, man. I love it. So yeah. I was joking about the whole marriage thing, guys. But anyway, yeah. So yeah, this is kind of what we're looking at, right? So right now we're kind of saying, okay, do we get this thing? Right now we've got this 15-minute demand structure down here. And we could very well just be having a very deep pullback here, guys. They get you right about in this area. Let me see here. Like right now, we're getting a little bit we're catching a little bit of a bid at the top of this 15-minute demand structure here. That 90% retracement's right around the EQ of it. So we might just be getting, a deep pullback here toward this wave 2 here. And then if we are, I think we're going to fire up pretty good at that point. If we're getting this, if this count is correct and this wave 2 is finding, finds support down here and rallies, I think it's going to rally strong up through. Because it's been just this constant break, push, to that point there without much let up along the way. So, yeah. And don't marry for money, you will end up earning every penny. Let me see here. Okay, so that's what we have there. DXY, guys. Man, I love you guys. You make this so much fun. Man, I feel bad for the people that say they don't have time for what we're doing here, right? Let me see here. This is the wrong one. Let me see here. Let me load this today's chart up here. The DXY. Oh. There we go. I've kind of changed the count a bit here. Looking at this as a, let me see. Right here. I guess 1, 2 right there. And then looking potentially as this R2 pivot up here on the 1 hour being wave 3. And so wave 4 in progress. We've got the 23.6 down here. It's just below the R1 pivot. I'm not convinced that's wave 3 yet. But if it is, 4 should pull back toward that, the R1 pivot there on the 1 hour. And then, that would give us a minimum wave 5 up here at around 94.5. But we've got this wave parentheses 3 minimum target up here of 95.117. So I think this may not be wave 3 yet. We may still have a little bit higher to go with wave 3, and then we have wave 5 heading up there. So overall, we should be looking for it to continue higher. Remember, my point that I've been looking at forever and a day, it seems like now, is 94.734. We've got to get above that. If we get above that, there's a lot more confidence in the count that the macro bottom was in January. Again, it still doesn't guarantee it, guys. Nothing guarantees anything in trading, but it's possible. The evidence is turning in its favor, I guess is the way to think about it. All right? So that's kind of what I'm looking there. So as long as this continues muscling itself up, everything else kind of starts feeling a little bit. If we jump here to oil, I was talking about oil, and we'll look at natural gas here again real quick as well, to kind of show you what I'm talking about there and what we've been kind of watching there. Let's go right here. Yeah, let's leave. Come on. Nope, that didn't work. All right, there we go. So oil. Oil does this crazy thing. So I've got this as potentially A or 1 up over here. And oil pushes up almost to the top. Oil hits a high there of 76.67, which is just below the invalidation level at 76.98. But now we're getting some strong movement down. We're getting large candle spreads. We're getting large volume. So we want to see this coming down. What we really need to see is we need to see this continue down below this 4-hour pivot here, right there around 72.60. If we can get down below that, that's kind of like the first kind of, okay, yeah, that top's maybe in there. But really what we need to see is continuation down through wave circle, wave circle, oh gosh, can't think of the word now. This 4 right here. Roman numeral 4, that's it. At 69.39. We need to see a breakdown through that. And then the next target, of course, is this 67.12, which is this wave B support. If we can get down through 67.12, boom, we should be looking down lower for wave 3. By the way, this potentially prints a double top here. So in terms of a double top, if we get the follow through down, if you don't like the Elliott wave count, let's go down and put it all the way down. There we go. Then that double top would give you a target here on a breakdown below the swing low here at about right there around $62. That's going to give you a pattern target of $46.33 on that there. So again, looking at this as maybe A or maybe 1 up here. Now, something I did here recently, let me see here. Was it this week's market breakdown? We take a lot of macro looks at stuff. And so, let me see here. So, we've got this, and this look on this breakdown, what we need. But if we're looking at this, let's see here. Here as the macro look here on this monthly chart here, notice we've got this double area of resistance here, which is kind of where we hit, right? And so you have this descending channel or this descending resistance here that we're just kind of, wicking up above over the last couple of months. And then we have this support resistance flip right here, which is where we're hitting. And so then 2 months ago, let's see here. Try to get this large enough so you guys can see pretty clearly. So 2 months ago, we have this doji up here at the top with this long-legged doji. And then last month, we have this supply candle here. But it still has a pretty decent little demand wick here because it picks up from this March demand structure here. That's where you get that rally that takes it back up into this month. But now, the end of the month comes up here on Thursday. And so what do we see? What happens, until Thursday? Do we get a strong drop down here? Because, all of a sudden we may see this continuing down at that point. Now, I think that really sets the stage here for what we're looking at. Because if I look at this, to me, you've got a 1, 2, 3, 4, 5 here. 5 down. And so 5 down, again, means this could be A, B, C complete here, right at the previous swing high. And then we come down. Remember, I told you, I'm thinking that we have this other move down. Remember, we had this big, huge low here in May, right here, of 2020. Which was the first time that it's ever been below zero, that's ever been down there and closed down there. And it closed, right around, it closed it, let's see here. It got down to a low of negative $40.32. So at one point, people were paying you to take their oil. They were paying you $40.32 to take their oil, a barrel to take their oil. And I think we've still got one more down to go, I think. So we'll see what happens, and we'll see if it happens here, I was thinking it was going to head up here, probably around 120 or 130 first and then drop down. But this monthly look is pretty interesting at the moment. Right? Have a great day, Mark. Let me see here. So yeah, I mean, as far as oil goes, I think this is kind of the area. I think if you can get an impulsive breakout above that and close above it, I think that sets it up for, heading up toward that 130 level. 120, 130 kind of thing. But if it gets rejected here and comes on back down, drops below this swing low from last month, which is 61.74, I think that potentially starts setting up one more move down low. And if you buy the idea of truncated waves, I mean, it doesn't have to go all the way down to negative 40 and 32 cents or below that. You can get maybe a truncated C wave. So maybe it gets down to negative something. But either way, it'd be a big move down from where it's at right here. So I think it's definitely something to watch there on that larger time frame there, guys. Have a great day, XRP Bandit. Natural gas kind of doing this thing I said earlier where we were talking about how it had rallied impulsively here today. And so as you can see here, big, huge move up here. I guess it was late last night. Yeah, it was almost right before midnight. So I had this real strong rally up. So right now, let's see. I put this out this morning. Looks like it's more or less what I'm looking at here. Let me see. I've got this as a 1, 2, 3, 4. This should be 5 of 1 here. And now that that's 5 of 1, it hit levels pretty good there. Almost dead on. A little bit off. Yeah, because you had the swing high right here of $6.318. So $6.31.8. And then over here you had it at $6.31.6. So very close to that right there, at least to this big move down. Large, look at this volume. Large volume compared to what it was. Large candle spreads coming down. So, you get the 50% right about this R1 pivot area here. So we might see that. Maybe it gets up here to the 61.8, which is that 38.2 flip right there. So we'll flip it the other way here so it's easier for y'all to read. But ultimately, that should just be, 1, 2 toward this 5.973 to 6.053 kind of area. And then we should see it continuing lower, which would give us a wave, parentheses 3, of at least, let me see if we get up here at the 61.8 or the 65 even right there in this structure here. So you've got this 15-minute supply structure right here in the wick. That's 65% retracement right at the EQ. So we'll say 6.075, we might see that. And then that would give us a minimum wave 3 down here at 4.985. So, that just ends up, starting this downtrend kind of thing here. If we zoom out a bit, you'll see how big that move up was. See this right here? And this was just wave 5 here. If we keep on coming out, we get this count coming up here from down over here, where we have, all the way over here. Kind of keep zooming out a bit here. There we go. Off this swing low down here in June of 20. And so that's where we're kind of working with all this. It looks like my numbers aren't showing up right here, but yeah, it gives you that 1, 2 right here. And then 1, 2 here heading up. But nonetheless, lots of good movement there. And then this final straight upward movement here. So I think that's probably the top of that. Should pull back now a bit and kind of give you some breathing room as far as natural gas prices go. Let me see here. Silver, guys, I don't know. Are you still into silver? I know people still kind of talking about it a little bit, but not like they were when they tried to squeeze it. They thought they were going to squeeze it. Let's see here. Silver I've got as a potential fifth of 5 of 3 here coming down. And so we had this dip just below wave 3 here this morning where we're getting this rally off of. So the rally should remain below wave 4 here. It may even get turned right here around the pivot. Break down below that swing low. Get you looking down here toward $20.99.5 at least on silver there. So silver's getting kind of interesting on the larger time frames here, guys. Excuse me. If we're breaking down below this wave B with my count here, so A, B, C, 1, 2, we're heading on wave circle 3 heading down towards 16,355 here. That breakdown below that wave B should add confidence to that count then. So we're going to continue watching it and seeing if we get that. I know everybody still wants to be bullish on silver, but it continues to, to break down here. It's been breaking. Remember we had this big range here that's been going on since August of last year. This range here, over a year now. So we're looking for some kind of either what we'll see is this strong drop down, which will say, okay, it'll confirm that as distribution, or we'll see it kind of just dip below this area here, kind of where we're at, and then it'll rally back up, and then we'll say, okay, well, that's reaccumulation heading back up there. 10 times Nino, what's up? Bear market indicator, you're growing your beard out. I remember when that used to be a thing, right? Don't put more thought into it than that. Let's see here. And so, that's your silver metal right there. And so now if we're looking at gold, gold kind of looking the same way here. Again, dropping down. We got a 1, 2. We broke down below wave 1 here. 3 should be in progress toward a minimum target. Toward a minimum target down here of 1678.60. Locally here, you'll notice that, it drops down below this wave B here. So I've got this as an A, B, C. And so this wave B is providing a lot of resistance here. It's trying to consolidate up against it. I don't know, maybe it's an A and a B here, and then we'll get a C on a pop out, and then it'll reverse back. But either way, it should remain below this high volume node right here at the 15-minute pivot. If we break down below the swing low here, it lets you know that we've resumed this target back, or this downtrend back towards 1678.60. Joel, what's up? He says the USD peso, Mexican peso, has been on fire. Yeah, that exotic pair, that cost you a lot to get into that. Have you been trading that? I usually don't trade it a whole lot myself because the cost of getting into it. I usually stick with the more liquid major pairs. If y'all were paying attention to Twitter this morning, if you guys follow me there, I posted this this trade. Let me see here. This trade. We gotta pull it up over here. So I did this one. I got into the USD yen overnight, long that. Got about 43 pips, about $610 in profit there. But as you can see here, bought last night about 10.17. It hit my target. I had a target set on there. It hit it there at 7.41 this morning. Like I said, got in at 111.177. Got out at 111.60 and 3. And if you look at the chart there, that actually stopped. I think price stopped at 0.64. So I was about 3 or 4 pips off that high, and then pulled back this morning. So it was a good trade. It was I'm glad I set it where I set it. I was thinking about setting it a bit higher. My target was actually 111.66, I believe. But I never go all the way to targets, guys. I never go all the way fully extended. I always try to get out in case of something like this. So yeah, it ended up working out really well. So that was a good trade there. But yeah, anything USD, with the movement here recently, USD CAD rallied huge. As you saw there, USD yen continued its rally. As Joel was saying there, USD against the Mexican peso has been flying. I don't even have that. Let me see what you're looking at there. I'm curious now. Let's see here. Oh, no, I don't want to load it. I want to get a new chart here. Because I haven't looked at this in forever and a day. It's been forever, man. Let's try this. You want to look at the Turkish lira, Merv? Yeah, give me a minute here. I'll take a look at that. Remind me in a minute here. Oh, no, but you're going to Mexico soon? Just interested in my thoughts on it? No, okay. Joel was saying about the U.S. dollar against the Mexican peso. Oh, let's see here. Gotta zoom out a bit here. Well, we're finding support right here at that resistance. So that's good. We're sitting just below the weekly, most likely the monthly pivot right there, which, you know, extend through the end of the year. So if we can get if we can get a impulsive rally above that, that would do wonders. That would be amazing for it. But we've got potentially right here a double bottom on here. We got potentially this Adam and Eve double bottom here. So there would be Eve with the wide head there, or the wide base, and then Adam with the steep base here, comparatively. And so, you know, breaking out above that swing high, which dipped just there above that that pivot. By the way, notice that's, you know, just below this kind of previous high here. So as a longer term trade, breakout above that gives you this possible target here of 23.7678 kind of area based on the height there. And so it takes you right up into this cluster right here, this supply up here, which you would, you know, normally expect anyway. Let me see here. Let me zoom in a bit. Yeah, it's just off a little bit. Somewhere right around that area. Let's see. 1, 2, 3, 4, 5. Potentially A, B, and 1, 2, 3, 4, 5 here is C. And then that would have to be a 1, 2 here. And this would be a 1, 2. Potentially a 3, 4 heading up. And it's a great daily candle right here. It's up 0.241 for the day, up over 1% for the day here. So locally here, I think that might be the swing low. Let's see, 19.84610. Yeah, that's the swing low right there. So, I mean, if I'm looking at this right here on the daily, looks like we've got a wave 3 up here at about 20.50287 kind of area. And then that would give us a minimum wave 5 up here, right around 20.63759. So, yeah, I mean, it looks like it's going to continue rallying the dollar. And, you know, it makes sense. Again, you know, the dollar's rallying overall, the DXY. So we should see it continue to rise up there. This wave 5 gets us right around this previous swing high, which is what we generally look for. So, yeah, I think we could see this, you know, locally here as... see, was that the swing low right here? 85.25, 88. Yeah. So again, potentially looking at 1, 2, 3, 5. But you know, that has a lot to do with what's going on right here. So right here, you know, if you're zooming in here, that wave 3 may overextend there. Probably will. Yeah, a lot of overlap here. That wave 3 is probably going to overextend. If wave 3 overextends here, I would look for it up here around the wave 5 target at 20.63759. That would be that secondary wave 3 target up there. But yeah, nice strong moves. This is that's 3 white knights right there. You've got large candle spread where the candle closes almost at the very top of the move, and they advance 3 in a row, never drop down. You know, opens, closes, opens, closes, up through there. So that's a nice bullish candle structure right there on it. Murph says, we eat bricks or food? That's the question here in Turkey. I guess bricks. Yeah, unfortunately, you know, the lira hasn't done so well against the dollar lately, right? Let me see here. Let's go make a copy here and check it out. Let's see. I was about to ask why I had marks on my chart already. I hadn't even used it. Oh, man. Yeah, look at that. I mean, that's nice structure there. Breakout, pull back, find support, push up. This right here is going to become support now. You're probably going to come back and test it at some point. But that's demand right there in that opposite candle right there. Let's see here. Yeah, this looks like, if I just look at this right here, what is this? Let me see, where's that low? 82.5907, 261, yeah, so it's this one right here. So if I'm looking at this, I see this going right here is a 1, 2. Got to change these a bit here. And then looks like we've got a 1, 2 here. And this may be a 3, 4, and a 5 up there. Which potentially 3 might be a 4 here. Might get a 5 up. We'll zoom out here a little bit in just a minute. Zoom out a little bit bigger. See what we got here. Yeah, see, that's right above that 1618 area. If wave 4 is done here, yeah, see wave 5 target right up here around that R3 pivot. Let's kind of zoom out here a bit. So that's the daily. As far as the weekly goes, you know, we came down, kind of found support around the pivot. Broke out, came back, found support there, hit the R1, pulled back, rallied up, you know, rallying, impulsively here, expanding volume and candle spread up through the R1 pivot and that swing high, that all-time high there. So, I mean, it looks like it should carry higher just based on that right there. Oh, my gosh, yeah. See, this is after, here in the U.S., we had the bottom of the 2008, the great financial crisis. The bottom of the market was right around March of 2009. And so this is August of 08. They pop up here. You know, it was right about that area there. Dollar was already rising. Dollar just continued to just decimate. Turkish lira there. Yeah, maybe bricks. Hey, Joel, you're welcome. But yeah, I mean, look at that. Look at that move up there. Wow. Let's see here. And the election in Turkey. Yeah, I know, right? It's so hard. It's so hard to get your government to do the things that you need them to do that aren't kind of tearing you up as citizens, right? I mean, that's everywhere. It's even here in the U.S. This particular channel is interesting here. That EQ is what interests me as support resistance here. And so let me kind of take this on another time frame so we can look at it a little bit. See, if I'm looking at this, I'm thinking we're probably going to see a run up to the top of this this channel here. If we're looking at that locally here. Kind of got this thing going on. Let's see where that hits. Yeah, look at that EQ. Right here, it's exactly where we hit that resistance. So I think somewhere up in this, this 10 to 11 area here looks like might be where we're headed there from that. If we're looking off the bottom here, we've got a 1-2. There might be some reprieve in sight. Maybe. We've got 1-2 here. And then 1-2. 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, we might get it up a little bit higher and then pull back, but then we've still got this 1, 2. We'll have a 3, 4, and a 5 still to go on that locally here, I think. So, yeah, I think we're probably heading up there. Yikes. Yeah. So, yeah, I think there's just further upside on that. I hate to tell you that. Unless you put your Turkish lira into dollars there. Oh, man. But, yeah, that's what I'm looking at there. So, good times, right? It's not good times. Let's see. Let's take a look at the NASDAQ here. What we got going on here? Let's see. Oh, there we go. Yeah, again, large. I mean, geez, just ugly, right? We gapped open here this morning, down through the 15-minute pivot, ran them all just right away. I had a wave 3 target down here. As you can see, it's kind of made it through that a little bit further. So it may or may nah. I think we maybe still have a little bit further to go here because we're already just about to get to overbought here on the 15-minute. So it may not be done yet with wave 3 here. Wave 2. The 2618 is right here at 14,424. So I would look right here at 14,501 first if we get continued breakdown. And then I'd look at 14,424. Look at that 2.272 and then the 2.618 as potential targets there. I don't know. I guess there's possible 1, 2. Let's see here. 1, 2, 3, 4. 1, 2, 3, 4, 5. So yeah, maybe 3's right here at the 2. And then either 4 is done here, a short 4, or we're doing an expanded flat. So we'll see it rally back up here toward, toward 14,646. Maybe the S4 pivot there. And then we'd have 5 continue on down lower. Right now we're still above wave circle 1 over here, which is 14,530 and 7 cents. If we drop down below that, though, that's going to add a lot of confidence to the idea that we got a 1, 2, and a 3 going on there. So we'll be looking for lower overall once it drops below that. Let me see here. Yeah, reality can hurt for sure, for sure. We are expecting things to go down. Do you think Bitcoin will be a store of value during these dips and it's going to sustain? No. If we have some big economic downturn, which is what it looks like it's building into right now, if we do, Bitcoin's a risky asset, guys. It's a risk-on asset. That means it only works when the market is risk-on. So the market's been in a secular bull market since 2008, 2009, since 2009, right? After the great financial crisis. So we've been, 12, 13 years of just up, right? And so that's why Bitcoin's done so well. But when the market turns and it goes the other way, well, people tend to take their money out of risk-on assets because they know that risk is off now. You don't want to be in risky assets. And so we shouldn't expect Bitcoin to continue rising once it's made pretty clear that the economy has gone to turd stool, and everything's going down at that point, because risky assets get hit the worst. Just like they do the best, in a bull market, they do the worst, in a bear market, because they're so risky. Again, you're putting so much risk in it. So higher risk, higher reward, but also potentially higher or lower on the flip side of it there, right? I think you get what I'm saying. Because I obviously can't find words today. Words are hard. So yeah, if this is the top over here, back at the very beginning of September, then yeah, I don't see anything good coming out of anything from there. Now again, until there's a big significant move down, I think there's still room for Bitcoin to move higher. But if we start seeing some really significant downward movement and the dollar really is rallying, in Bitcoin, it may take a little bit to convince you to sell. But at some point, the big players in there, the ones that have all the money, they're going to be like, yeah, no, we're not going to keep holding. Those same people you guys were all excited about that came in, that helped propel Bitcoin to 60-somewhat thousand, those would be the same ones that would propel it downward. They get out. Most of them. Would Saylor continue holding? I don't know. Honestly. But if he were to sell, he's got a lot to sell, right? And by the way, guys, just because he said he wouldn't sell, it's like, y'all, if you tell me you're not going to sell, I don't believe you. Everybody's got a price at some point, right? And that's not bad. It's just the way things are. We talk a big game until we're forced, we're faced with the situation, if you bought Bitcoin at 7,000 and it comes back down to 7,000 and everything's looking terrible, the economy's off the rails, it looks like everybody's talking depression coming in, are you really going to hold on and take that loss? Now, you might be like, well, I already dropped from 65, so yeah, I might as well. Most people are going to take that money so they have cash in their hand. Everybody's losing jobs. Their employers start shrinking up, right? You're worried about your job. It doesn't make a lot of sense to leave it in there, right? So we'll see what happens. He's already uber rich. Means nothing for him to buy or sell. I feel sorry for those that hang on his every word. Yeah, you got to be careful, guys. Unfortunately, we got these idiots coming here. Let me go ahead and get rid of this real quick. Add to the block list. I don't know why people think that's a good way to make money. I've never understood it. With what I do, I get hounded by people all the time via email or direct message or spamming my social media accounts, trying to get me to do their business. I'm like, no, I am the last person you want to approach in that way. I am so old school. I'm like, you know what? You better come at me like you're some professional business. I won't even think twice about blocking you. And it's not to be rude to people, but it's just, I have a certain expectation because I'm old. And I've reached a certain level, in wealth and in life. And I can't take you seriously when you come at me like that. So, yeah. Let me see right here. Ray Dalio looks like he's sold. Let me see here. Is there another one in here? Did I get him? Oh, I got him. There we go. It says an interesting interview with Ray. You guys should read it. It was out like 3 or 4 days ago. I'll have to check that out. Yeah. I like Ray a lot because, he thinks. I don't agree with everything he says. But I know that when we're talking about Ray, we're talking about somebody that's actually putting cogent, coherent thoughts together, and really trying to be successful, and that's what's important. I mean, that's what's helped him grow, his fund as large as he has. But yeah, most of the people that you guys kind of talk to out there, I wouldn't give a whole lot of thought with, because they're you have to understand, guys, when you're in social media with cryptocurrencies, you're in this just like this little community, right? And most of the people in that community are going to tell you exactly what you want to hear. For one, either so that they can make money selling you something, or two, because they haven't really been exposed to these other things that are going on. If you look at most of your big name followers out there, guys, most of them weren't trading in 2008 when we had the great financial crisis. Even less were trading in 2000 when we had the dot-com bubble. Okay? Or further back. And so, they're like you. They're still new to the markets. They might have built up this business, but they're still new to the markets. They haven't experienced multiple recessions, to get an idea for what happens and what's going on. So you guys, you just want to be careful with that. I'm not saying everybody's terrible out there. I'm just saying you guys have to absolutely be smart about who you're following, who you're listening to. Understand, where they may be short in what they're talking about. You absolutely, guys, you have to be vigilant. Okay? You have to be. There's no two ways about it. If you want to be a trader investor and you don't want to do research, you don't want to find the truth, which it may disagree with what you believe. And so if that bothers you and you don't want to find it because of that, or you don't understand that maybe there's a truth out there that is not what you think, then you shouldn't be trading, guys. Don't be investing. You're going to lose your money. You absolutely, I keep saying, it's been the theme today, right? You've got to be fluid. You've got to be able to accept that what you're thinking may not be correct if new information comes in. This is why I don't speak in absolutes, guys. I talk about the way that things look right now and what that could potentially mean. But we're always, again, even with with what I'm thinking about as far as Bitcoin goes, remember at the end of the day, guys, until it gets through, oh gosh, I've got this in a short time frame here. Sorry about that. Until we're printing a new all-time high, this interpretation could be incorrect. So we're playing local. We're watching locally. That's why I said this is your big thing down here. 20, almost about 29,000, right? That's your big alarm right there. If you're dropping through right here, just a little bit lower, right around that 38.9 or whatever, 38.9, somewhere around there, that's your first clue. Okay, pay more attention. If you're dropping through this low here, then you should definitely be looking at it much lower down, potentially 23, 17, 12, whatever, because then it opens up all those other possibilities. So what we'll have to see is not just as a chart there, but what's everything else looking like at that point. But once it breaks out above this all-time high here, I think we're good to go to, 98, 100,000 at least. Right now, locally, as I said, we're just kind of chilling out right here at the previous resistance area. Trying to get it as support here, looking for that move up. But we still, we need to see the move up. We need to see it. So locally, we can look for those things I talked about at the beginning of the show here. And then as we get through each one of those, it just adds more confidence to the idea that bottoms in and that, we're heading up to that new all-time high. Okay? Let's see here. Let me see here. That was a question you have. Who is selling into so much supply? Who is selling into so much supply? Do you mean who is selling into... Who is buying into so much supply? Is that what you're trying to say, Mike? I don't know why you act surprised, Hank. I still got a couple of minutes. Yeah, data, it's a scary thing, man. People clicking on it, right? Let me see here. Or were you talking about something else? Who is... I don't know. I'm having trouble understanding what you mean there, Mike. You said who is selling into so much supply. You mean who is selling? Or do you mean who is buying into the supply? I'm so confused. Sorry, trying to catch up. Who is dumping? Whoever wants to make money. There's always miners. Yeah, Hank, there's always miners. You know, I haven't looked at any on-chain metrics lately. I usually don't keep up with them a whole lot. But maybe I'll take a look at that and talk about it on Friday. Maybe I can get some conclusions out of that. Is Yellen buying the dip? Hey, it's funny you mentioned Yellen then as we get out of here. Because Yellen, she's the Treasury Secretary, guys. And again, if you picked up this week's copy of the newsletter, Market Breakdown, I kind of went over the idea, with the debt ceiling and what's going on there. And basically, if the debt ceiling is if the debt ceiling isn't raised, okay, here's the way it works. The debt ceiling is just how much debt can the U.S. issue. So how much more treasuries can the U.S. issue, okay? If the limit is not raised, the U.S. cannot issue any more debt. Remember, we're a debt-based economy, so we need to issue debt to raise money to pay off our other debt and our bills, right? So what does that mean? Well, it means that if the debt ceiling is not raised, then that means the U.S. Is going to have to do one of two things. Either default on its loans and stuff, or default on its payment to people, military, retirement plan. By the way, October 1st is a big, the Treasury's got to pay into the military retirement fund. And that's a big push there. But Social Security, all that kind of stuff. Now if it's these things, especially if you think about like military, right, or government employees, if you hit a debt ceiling and it's not raised, then they don't get paid, right? And they don't get paid until the debt ceiling is raised again. So they can go a month or 2 months or whatever without even getting paid, still having to be at work, right? But they get the back pay. So they do get it back. It's not like they just lose it. But it creates hardship. And this hardship in this particular time right now, with where we are in the economy, it's not necessarily a good thing. The thing is, you don't have to default. It's the closer you get to defaulting, the more difficult the move becomes. And so, we can look at 2011, I think, was we got pretty close there. And that dropped, I think the market dropped something like 20%. But yeah, if you can't create that debt, then you can't continue paying everything, right? So here's the problem with all this dollar liquidity. You have all these dollars sitting there on that other side of the market, right? So not over here on the retail side with you and me. It's sitting over there with your primary dealers, your banks, money markets, stuff like that. So the dollars are just sitting there. And, again, they need somewhere to go. And so right now it's the reverse repo because the Fed has so many of those U.S. treasuries, right? And so it just trades them off for the night. It pays a little tiny bit of interest, but hey, it's something, right? And it gets those dollars into what we call pristine collateral. If Yellen, she talks about how, and I talk about it in the newsletter here about how what it could mean if we default. Interest rates rising, defaults on payments, stuff like this. And what it just basically means is everything gets more expensive all of a sudden, guys. And they get more expensive when there's less money out there. And so you need this debt ceiling to be raised so that more treasuries can be issued so it can help pull that extra liquidity into it, right? And then it gives money back to the government, which the government can then use to spend to do its thing, right? So that's kind of where we're sitting right now with this whole debt thing. Are the Republicans really going to keep it from happening? I don't think so. You don't want to be the Republicans and go, oh, look, we caused all this problem for the U.S., because that's how it would be seen. Mitch McConnell and them. But, they're finagling. They're trying to get some concessions and whatnot. And, so it just is this game. But if you want to know more about it, guys, definitely subscribe to the newsletter and check out this week's release on Monday. They came out on Monday. I talk more about it in there on that. Let's see here. A whale told you. I wouldn't get into that, man. Don't. First of all, they're just one person. One person does not move the market. I know you guys may not want to believe that. You may think, oh, they got so much money. It looks great. I have to listen to them. Don't. History is rife. Markets are rife of singular wealthy individuals losing everything they have in the market because they said one thing and it went the other thing, right? So don't do that. Besides, you don't even know if they actually have the money. There's a lot of BS that goes around that you guys need to be aware of. Okay? So either Christian, either that's the issue there, and you're not paying attention to that, or you're just here spamming the channel, in which case, we'd have to ban you. I don't want to do that. I'm not very liberal with the banning, but not unless people get in here and start talking ridiculousness. And that just means comments like that. That does absolutely nothing to help you in the market, guys. It does absolutely nothing to help you in the market. And so if it's not going to help you, there's no reason for it to be in chat, right? Next up in Education for Friday, reverse repo. No, you can just read issue 2 from last week. I believe last week we talked about reverse repo, didn't I? Or was it week 1? Week 1 or week 2 we talked about... oh, wait, no. It was week 1. Reverse repo was week 1. Week 2 was China and Evergrande and World Reserve Currency. This week was debt ceiling and Jerome Powell's comments. By the way, guys, don't forget we've got the NFP coming up on Friday. That's the non-farm payrolls release. Just as a quick aside here, Jerome Powell said that he didn't need to see any huge fireworks number coming out of it. He just wants something consistent and pushing up. And he believes that those two-prong tests that they're using, he believes the inflation side is done, is good. He said that he's just looking for some continuation, some solid numbers this week is all he's looking for from the employment. And he said if it does that, then he believes that their employment argument is also taken care of. And by the way, those are the two things that if the board believes that those two things are complete, a majority there, then guess what? Tapering starts. Tapering doesn't mean they stop putting money out. It just means they put less. So if they're putting 125 billion a month right now, then they're only doing maybe 120 billion from then on. By the way, interest rate hikes. The market believes that if we talk about taper, that means interest rate hikes are coming. Jerome Powell wants to push it out. He wants to extend it. He wants, maybe 1, maybe 2 interest rate hikes next year, leading into 2023 afterward. Tapering to complete around summer of next year. But, again, guys, I'm of the belief that they're probably going to have 3 interest rate hikes next month. Or next month. Next year, by the time 2023 rolls around, I think they'll at least have raised interest rates 3 times. I just think we're kind of at that stage of things. And so, of course, that would be dollar bullish, of course. So, again, I don't think that we're going to default. I think the debt ceiling thing will be taken care of and it'll go. But, just taking it this close hurts the market. And it could be that kind of thing that really snaps it and sends it down. So just be careful out there watching it. It plays a lot. The ability to raise debt via treasuries is a big deal. Especially with all the QE money that's been pumped. It's kind of sitting in that little pool over there. So it's not here on our side, guys. It's not on our side. Inflation that we're getting, I'm a firm believer, is just, cycles. Not cycles, but bottlenecks, production and delivery bottlenecks. In case you hadn't paid attention, the LA port is just ridiculously behind. They've got 60 plus ships just waiting with stuff on them, waiting to get out there. So there's a supply chain bottleneck right there. And that kind of stuff, I think, is what's, causing, the inflation, the rise in prices that you're seeing. Everybody's calling inflation. I think that's where it's coming from. So, yeah, that, and like I said, production as well. So, anyway, I hope you guys have a great weekend, okay? Yeah, Asim Risk, man, check it out. I know this week, like I said, this week I got the report from Review, and they said that every issue was delivered to an email, to the subscribed emails. So if you don't have it, check your spam box or your junk somewhere in there, because they were all delivered. So, but check them out, yeah. Anyway, you tried to manipulate the market, Christian. Don't do that, man. Joe Ryan, what's up, man? As soon as you saw the DXY pump, you were waiting to see what I had to say. Yeah. So there we go. That's what I have to say. Anyway, yeah. So again, the big thing this week, guys, coming up is, of course, the non-farm payrolls here in the U.S. anyway. So keep an eye on that, but that's Friday. Until then, just remember, guys, the only thing you control in the market is how much you lose. That's it. All right. Risk management is where it's at, guys. I keep telling you. I'm going to keep telling you. That's where it's at. You got to do risk management before you make your money. Most important thing you'll ever do as a trader every day, in and out, okay? You guys have a great week. Trade safe. And if I don't see you guys over there in Discord, if you aren't joining in, which you should be, but if you aren't, I guess we'll see y'all on Friday, right? 11 a.m. Central Standard Time. Have a great week, everybody.